Hosted in conjunction with Chris Media, the CEO interview series allows investors to hear directly from the CEOs leading the companies featured on Wholesale Investor. Enjoy the interview and reach out via the details in the description.
Hi, and welcome to another episode of the CEO interview series. Today I'm joined by Adem Becirevic, Director at Virtual Financial, and Paul Jansz, Advisor to the Board. Welcome to Crisp TV, gentlemen.
Thanks, Rhythm. Great to be here.
It's great to be here.
Amazing. Now, Adem, I'll start with you. So to begin our interview today, can you give us a brief overview of Virtual Financial and executive summary for our audience?
Yeah, thanks, Rhythm. Well, Virtual Financial was started out of, I had a firm called Spectrum Financial, and that was an accounting firm, financial planning and home loans. We've decided to go and just specialise just in financial advice. So I'm a CPA qualified accountant by profession, and the whole idea for us is to really try and make financial advice affordable for all Australians, and we're very much trying to do that, trying to help as many Australians as we can in regards to being able to afford financial advice.
Brilliant. Now, it would be great if you could break this out a little bit for our audience. So what was the initial problem at hand that you came across and you wanted to solve? You touched upon it, but let us break it down a little further.
Yeah, thanks, Rhythm. So basically what's happened in the financial advice field, we had the Royal Commission, and there's been some good and some bad come out of that. I suppose the good is we've now got financial advisors are more qualified, can they give better advice? But the bad is the financial advice world has gone from 28,000 advisors down to around 15,000 advisors. Banks have gone out of financial advice. They're kind of, I think, sick of the retail environment getting sued all the time. So it's really very difficult for people now to get financial advice and to get affordable financial advice. So it's really, we see it as an opportunity to really build a great company. We still believe we can make a great profit in our company, but at the same time help a lot of Australians moving forward.
Yeah, I think just to expand on that as well, if you don't mind me interrupting there.
Yeah, absolutely.
The biggest problem that let's call it, all of us as individuals have got different investments, even if it's our superannuation, where most of us sometimes forget that is an investment, but because of the compliance that is around what needs to be handed out. So it's very much a compliance-driven industry, which means it's time, which means costs are forced very, very high. So for your average person, it does make it very costly to go and visit your financial advisor for them to advise you on and provide you with proper advice on where your money should sit and based on how you want to create wealth in the future. And that's probably a part of the problem that we've identified and said, well, we've got a different model that can suit to provide it affordable to all Australians. And we've been able to roll that out quite successfully.
That's brilliant. And thank you so much for breaking that down. Now, for my next question, it would be great if for our audience, you could give us an update on your current capital raise and the market value that you're bringing.
Yeah, look, the capital raise we started early this year. It's sort of one of your functions as well. And we've got an offer document that's out there. We're looking to raise $10 million in capital, and we know we can get funding for $10 million. So $20 million in total is the current offer that it's on your portal at the moment. And anyone will see that what we're doing with that is we're looking to buy existing financial planning businesses. So what we've set out to do is we've set out to go out and purchase customers, revenue, and profit. They're the three key areas that we've gone out to purchase. And in an industry where we know, as sort of Adam just said, it's been decimated by the amount of advisors that have stepped out of the business, that have been forced out of the business because of the new, again, compliance-driven exams, a whole lot of reasons where people have left the industry. And we're looking to purchase existing firms, tuck them in, so it's very much an acquisition model, and then we're going to rebrand and then take that to market. So look, the great part about what we're doing is we've initially set ourselves as a $20 million target to purchase $10 million of revenue. We're buying it at 2 times. And then we believe that over a period of time that people can exit, and we've seen, and Adam can talk about this as well, we've seen other businesses exit for anywhere between an 8 to 15 times. So it's in what we would regard as a really good industry. It's not a startup. We've been operating for 21 years. We're in scale-up mode. We're acquiring businesses. We're tucking them in. We're bringing in our systems to then create greater profit, which will then provide the lift or the uplift, let's call it, in share value.
And I think also, Rhythm, is that there's never been a better time to ever do it. If you look at what's happened in history, firms like Shadforth and Count Plus, they did it when it was very, very tough in the industry, where the banks were still in financial advice, when there was a lot of financial planners around, and they went through GFCs and all this sort of nonsense. So for us now, we don't have the banks as competition. We have people wanting to sell their practices, so there's practices there to be able to be acquired. But we believe that in time, everything turns, everything goes through different kind of periods, and we believe, and the banks are already talking about, can the tellers give general advice? So they're already talking about let's get back into banking. So we believe in 3 to 5 years' time, when we've built $1 billion of funds under management and we've got $20 million of revenue, we believe we're going to be in a great position then to either sell to a private equity or to sell to a bank or to publicly list. So we've got a great opportunity for our investors to really invest in something that's really a low risk model. Like there's something that's there. We have ongoing trails that are actually worth something. So you're paying multiples for them. So we actually have an asset there, and the business has been in place now for probably over 20 years. So we have an established business, but a business that's going to really grow over the next 3 to 5 years.
Brilliant. Well, it would be great, to hear your thoughts on the future of this space as well. Like you mentioned previously that, many financial advisors are now leaving and the number has dropped significantly to approximately 15,000. So what are your thoughts on where do you see this space going in the near future?
Yeah, well, it's very interesting. I mean, I certainly see the future. I believe ASIC can have to make some changes in regards to what they're doing in regards to the financial advice space. They're already talking about potentially one of the biggest problems we have in our world is a thing called a statement of advice, an SOA, where they probably normally average about 100 pages, and it's probably about the size of a book you'd read. And as we know, not many people read books. So probably 1 out of 100 people would actually read the SOA. So they're talking about making it in the future a bit easier in regards to maybe video content, like we're doing today, like using Zoom video. So it might be a 5 or 10 minute video. Explain to the client what your super is, how much insurance you got, what your levels are, what your risk profile is, what investments you have, and it might be. So we see the future as as being very positive for consumers and a very positive space, and we definitely want to. I believe we're leading the way with what we're doing with online, being virtual, seeing probably 99 out of 100 clients we see online. However, we are a hybrid model. Some of our clients do come into the office, but I think we're really leading the way. I think the old-fashioned way of clients coming into your office and these advisors having spending hundreds of thousands of dollars on office space and and having a lot of staff and long processes and billing clients big money. I think that's got to change. And where I've come from in my past is I wasn't born with a silver spoon. I've had to do it tough, and I know what it's like to not have money and to really struggle. And so the financial advisors that I learned from always had the idea that they are there to help everybody. So it's not just about helping the people that have got $1 million in the bank.
Absolutely. Do you have any other points to add, Paul?
No, I think like the great part is we're not recreating the wheel here. We're following a model that's been successful. We're following a model that we know that in the past, in tougher times, have got closer to a 15 times multiple. So we're also very clear in terms of the strategy of possibly selling back to the banks, because banks love data. We're obviously a data play. We're obviously purchasing customers that have got money. It's reoccurring income. It's an easy model for a bigger player to tuck in. So they're the sort of things that we're excited about as well.
Brilliant. Now, for my next question, it would be great if you could dive deeper into the skills of the team that you have at Virtual Financial. So, what do you think are the skill set that they bring to the table that helps in the growth of the venture?
Yeah, that's a good question. So we have financial advisors working with the practice. These financial advisors have been trained by me, and they virtually are doing most of their meetings online using Zoom. We have a very systemised practice in regards to how we work with our clients. We have a process where we have what we call a 5-minute questionnaire, which should obviously take 5 minutes for our clients to complete. That questionnaire will tell them the six main areas in regards to their income, in regards to their super, in regards to their insurance, in regards to their estate planning, and so forth. So it goes through each section and it rates them between 0 and 5. And at the end of the 5-minute questionnaire, it rates them out of 100. And obviously, what we're trying to do is get our clients as close to 100 as possible. When they normally come to see us at first, they're normally somewhere around 40 to 50, and our job is to get them from 40 to 50 up to 100, and we work with them very closely. The next thing they have to do is fill in what we call All About You questionnaire. So to keep our costs down low for our clients, we want to work with clients that actually take an effort in their own financial advice in regards to going forward. So the clients then will fill in an All About You questionnaire, which should take somewhere between 15 and 20 minutes, and that'll tell us about their personal, like what their house is valued at, what their investment properties are, what their super is, and so forth. It goes into a bit of a deeper dive. Then what we do from there is the first meeting with our new clients is free, is at our cost. We then do a meeting from all that information. We then do a retirement plan. So we see if they're on track. So most clients, the number one thing is if they can't sleep at night is because they're worried about retirement. They're worried if they're going to be able to retire on time. So what we do is we don't even charge them for this. We show them on screen where they are today, where they'll be in the future if they follow our plan. And 8 out of 10 people normally are very, very surprised and shocked that they can actually retire very comfortably if they follow our plan. And then from there, obviously, we then go through the costs and the fees and everything else with our clients to really try and help them. So we say to all our clients and our new clients that they should all invest in themselves, and they should all take off at least one day a year where they look after their own financial well-being.
Yeah, definitely. Completely agree with that. Now, as a parting question, Adem and Paul, can you please tell us about what does the strategic outlook look like of Virtual Financial over the medium term, and what should prospective investors watching this interview should be excited about?
Yeah, I think there's plenty to be excited, and sort of Adem can sort of wrap up a little bit as well. Just on that last point of Adem's as well, I really do encourage everybody with your partner, spouse, wife, husband, whatever it may be, to do the 5-minute questionnaire. To everyone watching this, it's outstanding, and I do it every 12 months because your circumstances change every 12 months. So I do encourage everyone to jump onto virtualfinancial.com.au, and it takes 5 minutes, literally 5 minutes, but the data that comes out of it is outstanding. Look, we see again, we sort of cover this a little bit in terms of the future. Our goal is to continually buy firms that are aligned with our business. So we've targeted specific financial planning firms that have got the right type of clients that we're looking for. They've got the right level of recurring income. And we've already targeted 5 or 6. We've contracted. We've purchased 2. We're well on our way, but at the same time, we're also conscious not to move too fast. This is about moving at the right pace and not making mistakes. So we want to make sure that we do it the right way. The next 3 to 5 years, as Adem mentioned before, to have $1 billion under advice is a part of our goal. But at the same time, to make sure that people feel comfortable under the new brand, because we're obviously tucking in firms and we won't be changing brands immediately. It's all about making them feel comfortable with who we are and what we are and how we're going to actually work with any sort of investor and customer for that matter. We've got customers that have also invested. So the idea is to work with them to provide them with, again, a nice little return on investment at the end of the day.
Amazing. Well, we are looking forward to keeping tabs on the growth of virtual financial going into the new year. For prospective investors watching this interview, if you would like to get in touch with anyone at the team at Virtual Financial, please see the details at the side of the screen or in the description. I would like to thank you again, Adem and Paul, for joining me for this interview, and I wish you all the luck with your venture.
Thank you very much.
Cheers.
Thank you.